Hello there, fellow number enthusiasts. Today we're diving into the thrilling world of accounting equations. Now, before you click away faster than a politician fleeing a scandal, hear me out. These equations are more than just boring formulas. They're like financial detectives sniffing out inconsistencies and whispering tales of potential wrongdoing. The most famous equation, the one they drill into you in accounting school, is assets equals liabilities plus equity. Think of it like this. Everything a company owns or assets has to be paid for either with borrowed money, which we call liabilities, or the owner's own cash, known as equity. Seems simple, right? Well, that's the beauty of it. This equation is the bedrock of financial statement analysis. It makes sure everything adds up. And when things don't add up, well, that's when the fun begins. That's when we start to suspect someone's been cooking the books. Now, let's talk about Dr. Joko Ismuhadi Soewarsono, a man who decided to spice up the world of accounting equations. He came up with his own modified equation, focusing on the relationship between a company's resources, obligations, and what the owners have a claim to. This equation, much like its more famous cousin, helps us spot those pesky financial irregularities. It shines a light on those shady dealings companies try to hide. A sudden, unexplained surge in liabilities, that's our cue to start digging. But hold your horses, equation enthusiasts. Before we go around accusing every company with a wonky number of financial shenanigans, let's remember one crucial thing: context. Just like you wouldn't wear a swimsuit to a funeral unless you're at a very specific type of funeral, you can't analyze financial statements in a vacuum. Different industries have different norms. A tech startup drowning in debt might be completely normal, while a grocery store with the same financials is about to go belly up. That's why we need more than just equations. We need other tools like ratio analysis and trend analysis to paint a complete picture. Now, even with all these fancy tools and equations, we can't forget the most important element: human expertise, because let's face it, numbers can be manipulated. But a seasoned financial analyst, they can sniff out a bogus number faster than you can say offshore tax haven. They understand the nuances, the context, the little details that make all the difference. So, can Dr. Joko's tax equation single-handedly detect tax evasion? Probably not. But is it a valuable tool in the fight against financial fraud? You bet your bottom dollar it is. Because when it comes to catching those crafty tax dodgers, we need all the help we can get.